Okay, hello guys. Welcome to my YouTube channel. And from most of you have been waiting to meet the guy behind the YouTube channel. So, my name is Kudzai Nyaguse. I'm from Harare, in Zimbabwe. Okay, so I think that's just about it. I'm not going to be talking much about myself. Okay. So I promised you guys a video on how I'm doing my things, the strategy that I use, and stuff like that. So let me just start by saying I think this video is going to be a two-part video. Okay, so that it's easy for you guys to watch and follow through. I know concentration spans are different for different people, so I'll try and keep it short and precise. Okay, so uh, okay, strategy. I think um, let me start off by saying what we need to achieve in Forex is consistency. Okay, it doesn't matter what strategy you are using. What matters is your level of consistency, because it's consistency that's going to make you money, not your strategy, not your sniper entries or your, I don't know, pegging 1,000 pips. The money is in being consistent. Okay, and consistency comes from patience and discipline. By patience and discipline, I mean to say you you need to wait, guys. You need to have the patience to wait for setups that are defined by your particular strategies. Okay, so in my point of view, I think you one needs a strategy in order to be consistent. You need a strategy and you need a plan on how to execute your strategy. Okay, so your strategy is going to be your trading methodology, and the trading methodology is the one that defines your entry and exit points. Trading is like a business. Okay, you need to strategize. You need to be smart. You need to be organized. You shouldn't be doing your things haphazardly without a plan, without a method of execution, and a way of managing what you are going to be trading or executing. In other words, what I'm trying to say is you need a trading plan to manage or execute your trading strategy. If you have a strategy without a plan, then chances are high that you're not going to make it. You are not going to be consistent. To be consistent, I mean to say. So, like just like any other business, you need a business strategy in this case, which is our trading strategy, and then you need a business plan. uh, it's like running any other business. You need a blueprint for the business, which is your business plan. Then you need something like a marketing plan, which you use to implement your business plan. Okay, it's the same thing with trading. You need a trading strategy, and then you need a trading plan, which will guide you on how to implement and execute your trading strategy effectively and efficiently, so that you can achieve the maximum potential of the strategy that you have. Because if you have a strategy and you don't execute it properly, then most probably you're not going to be getting uh, the full potential that the strategy has to offer. So you need a strategy and you need a plan on how to execute or implement your strategy. Okay, so I also think that you need to be selective in your trading, guys. You don't just shoot anything that moves. You need to select instruments that you trade. Okay, and the instruments can be okay. I would advise that you pick instruments that are related. Okay, for example, if you are going to be trading currencies, we all know that Euro USD and USD CHF are negatively correlated. Let me just demonstrate that here. This is Euro USD. Today is the 18th of March 2021. So this is Euro USD on 15-minute time frame. And as you can see, Euro USD today at the double top. and then it kind of like dropped on 15 minutes. Then if we go to USD CHF, it was almost the exact opposite. Okay, USD CHF had a double bottom, and then after the double bottom it went up. So you need to select your you need to be selective. You need to know the instruments that you trade. You need to familiarize with those instruments. Okay, and then for example, another example, I'll take GBP USD and Euro GBP. These two usually they move in opposite directions. They are negatively correlated, just like Euro USD and USD CHF. So as we can see, GBP US today did a small double top on 15 minutes, then it's still dropping. If we go to Euro GBP, it didn't quite have a double bottom, but it's going up. Okay, it's that's the relationship between the two pairs. And then if you look at GBP USD, this is day number one, day number two, day number three going back. GBP USD formed sort of like, I don't know, those guys that trade BTM, and maybe you would call this a peak. I don't know. Let me just put a box around it. Okay, it had a low. Okay, and then it's been rising from that low since the day before yesterday. If we go to GBP, Euro GBP, it had a high, and it's been dropping from that high since the day before yesterday. So these two are also negatively correlated. Then we have examples of positive correlation, sorry, between let's say Nasdaq and S&P 500. They move together. They move in the same direction. Their general direction is the same. If you look at this is Nasdaq 100 1 hour time frame. It had a low, which I think BTMM guys would call a peak formation low. And then if you go to S&P 500, it also had the same low. Okay, and they've been rising ever since. So you need to be selective. You need to, after being selective, you need to familiarize with the instruments that you are trading. Okay, if we go, for example, to my deriv account, I usually trade boom and crash indices. Okay, and from experience and from familiarizing with these things, I know, for example, that if I'm going to say buy one lot of Boom 500 from this point where my cursor is to say, for example, this point, it's going to be, if it's going to go against me by, I know, I don't know this distance that I have. Okay, I have graduations on here. If it's going to drag me from this point, loss, I'm going to have a negative floating loss of about $25. So before I enter my trade, according to my lot sizes that I'm going to be executing, I already know how much I'm going to be risking. I already know that if I'm going to be holding this trade from this point to that point, I'm going to have a negative floating loss of around $25. This is $50 and so forth and so forth. From this red line here to that one, it's going to be about $100. So probably if I'm going to execute a trade from here, okay, I'm going to buy it here and my stop loss is going to be somewhere around here. Then my TP will be on this red line. From here to here, my stop loss is going to be about $28 to $30. Then my TP is going to be $100. So you need to familiarize yourself with the instruments you trade. You need to know their general behavior. You need to know uh, what lot sizes to execute depending on the size of your account. Okay. And then the other thing, mind you, as we are still talking about strategy, and this is just a general background of how you should strategize your trading methodologies or strategies or whatever you want to call them. Okay, you need to keep things simple. You need to keep it simple. Trading in itself is a bit cumbersome, difficult, and complicated. So the easier you keep it for yourself, the easier it's going to be for you. Okay, we don't withdraw complicated strategies. We don't withdraw pips. We don't withdraw sniper entries. Okay. So you need to keep that in mind. We got into this business for the profits, not for sniper entries and begging a million pips. Doesn't matter how many pips you are going to beg. What matters is your risk management. How many lots you are going to be executing. You can execute a trade a sniper entry that's going to give you 1,000 pips today, and maybe depending on the lot sizes, I can execute a trade that's going to give me 30 pips. It won't even be a sniper entry, but I can make more money than you, not because I had a sniper entry or I'm using a complicated strategy, but because I'm keeping things simple and I'm managing my account properly. Okay, so it's the simple strategy. From my experience, it's the simple strategies that are going to be profitable. Because most of the times, if you're going to be adding complex strategies, putting 5, 7 indicators on one chart, they are going to be going whichever way they are going, and you are going to be more confused than you were before you had that complicated strategy and all those indicators and things. Okay. And then, like I was saying, you need to have a trading strategy and a trading plan. Your strategy defines when you enter the trade, when you exit the trade, where your stop loss is going to be. Okay. And then your trading plan, it defines the lot sizes that you're going to be using. There's your profit objectives, like how much are you going to be targeting, let's say per day or per month, or whatever you are going to be, I don't know, it predefines your risk before you enter the trade. Your lot sizes, your risk reward ratio, and general trade management, how you're going to be managing the trade as it's going to be running. I know some people, they just trade based on risk reward ratio. They risk let's say they risk $10. If you're going to be using, for example, 1:4, you're going to be risking $10 to target $40. And those guys, they just usually let their trade run. They execute a trade, put a stop loss, put a take profit. The trade is either going to hit their TP or it's going to hit their stop loss. And that's how they manage their trades. Some people, they move stop loss to entry and they just let the trade run without a predefined or defined take profit. Some people close half the trade size and put stop loss to entry and just let the trade run. All those things are part of your trading plan. Okay. And then your trading strategy is going to be telling you when to enter. For example, you enter when two moving averages cross over, and then you exit when they cross over in the opposite direction. That's your strategy. Then the plan is going to be managing your strategy. How do you implement and how you execute your strategy? That's going to be your trading plan. Okay. Then, yeah. Uh I think there's also the aspect of how you manage your account. Trust me, guys, it matters. How you handle your account, how you manage your account is very important. And by managing your account, I mean to say, okay, for example, myself, I know everyone wants to keep their account growing, but it doesn't make sense. To me, it doesn't make sense to have an account growing from $10 to $10,000 or $100,000, yet yourself you don't have any money to spend. So what I usually do, the way I trade is I trade usually for 1 week. Then after 1 week, I withdraw 75% of my profits and leave the other 25% in the account. That way, I keep my pockets growing and I also keep my account growing. Okay, so you need something like that. You need to keep your account balance healthy, but you also need to keep your pockets healthy. Because like I said earlier on, we are in this business for the money. So it doesn't make sense for you to just have an account that keeps growing and growing without making withdrawals. You really, really, really need to withdraw, guys. Okay. So yeah, I think that's about it for today. Thank you guys for watching, for liking, for subscribing to the channel. So I'll be bringing part two of the strategy, which will be the actual strategy of showing how I take my entries and how I take my exits. Okay. So yeah, cheers guys. Have a good day, have a good night, good, I don't know what you want to call it depending on where you are. Okay. Please like and subscribe. Smash that subscribe button, smash that like button so that I can also get motivated and keep making more videos for you guys. Okay, also comment on the comment section so that I know the issues that you guys have and I know how to address them. So cheers, guys.